Hey, good morning, everybody. It is Mike Wise, CMG Home Loans, with your weekly mortgage update, and it's a little bit different setup this morning. I am not in my office, but wanted to do the update with you. So let's dive into some of the week here. So the Fed, they lowered the Fed funds rate by a quarter of a point. It was very telegraphed. That's where they were headed, that's where they were going, that's where they told everybody. And I'll go into that just a little bit, but the dilemma that they're running into is basically the CPI came out, and that measures inflation to kind of you and me out on the street, kind of buying goods and so forth. And it's basically running above, it's at 3.1%, which is above the Fed's 2% target. So this is the one thing that they've been, a little bit concerned about with the tariffs going forward, and why maybe they didn't go down 50 basis points in the rate cut. So retail sales, they did, even though the inflation was still, elevated just a slight bit. The retail sales, they did surge over the last couple of weeks here, last month. But I think that there was a little bit of a shift in what the consumer is doing. Sorry, there's a plane going overhead here. So the retail sales, they were up. It seems like more people are out shopping for goods and services and buying things for themselves rather than traveling. And so the travel industry is kind of taking a hit here at the end of the summer. So not quite as good on the travel, but people are now buying, maybe some clothes or something like that. So it's not, that's where the retail sales kind of stepped up a little bit. The Fed drama. So at the end of the day, there's a Lisa Cook who Trump fired. It's in legal battle right now. And then you have Stephen Moran, who was just confirmed, which is a Trump appointee to take over for the rest of the year. So a lot of stuff going on there. He abstained. He wanted to do a 50 basis point cut. Everybody else was okay with a 25 basis point cut. So at the end of the day, the Fed is going. They cut the 25 basis points. They are. Their reasoning for it was basically the jobs market, and the huge downward revisions that we saw for the prior year, and that the job market was soft. So the Treasury market, basically the U.S. yield on the Treasury went down to 4%. This is wrong here. This is a misprint. It's 6.2%. But basically, the rates actually went up slightly on the news of the Fed rate cut. So let's just take a look at the current market here and see kind of where we stand with the market. So this is live right now this morning. The prices, remember, the green, better prices, higher prices means lower interest rates. So you could see the Fed announced Wednesday and Thursday and Friday, the prices came down. That means the rates go up. We could get down to this 25-day moving average, which would not be great for mortgage rates. But at the end of the day, they are at their lowest in over a year now, the mortgage rates. The yield on the 10-year Treasury, like I said, moves in opposite direction of the prices. So the higher the yield, the higher the interest rates. So you can see Wednesday here is when the Fed decided. There was a lot of movement, up and down here, but basically it's gone up, and we're hitting basically the kind of 412 is kind of our ceiling that we're at right now. So hopefully we bounce off of that. If we don't bounce off of that, we'll go back up to the 418, 419 levels that we were at, even before the last 10 days. So anyways, mortgage rates, they are down. They're down at the 6.22% for a 30-year fixed rate loan under $750,000. I'm sorry, under $800,000. And so they're good rates right now. And I think now's a great time to buy a house. But at the end of the day, we are moving and grooving here. We'll see what happens. Hopefully, the rates will continue to hang right around 6% here, and we'll move forward. This is Mike Wise with your weekly mortgage update. Sorry for the planes overhead, but have a great weekend. I will be around, and we'll see you next week.